Hey peeps, welcome back. So today we're going to be talking about 3 reasons to buy the Simplified Volatility Premium ETF, or SVOL in short. Let's get it. So the first reason you might want to consider picking up some SVOL is the stability. If we take a look at the chart of SVOL over time, you guys can actually see that it's been relatively stable pretty much since the lows in the SPX. So the SPX is the actual S&P 500. A lot of people use the SPY, but the SPY is actually an ETF. So as you guys can see, SVOL has kind of been ranging since this was another low in August, or maybe it was a high, I'm not sure. But the actual low of last year was in October. So as you guys can see, it bounced here. And ever since then, even though the market's been moving up, it's kind of just been ranging around. You have maybe a slight upward channel going on here, but it has not broken out of this key resistance yet. So you guys might be looking at the chart and saying, oh, well, there's not really any price stability here. I mean, look at the price. It dropped massively. Well, you have to understand when the Fed's raising rates, the VIX, so we'll take a look at the underlying asset here, which is the VIX futures, usually spikes up. And when the VIX future spikes up, the SVOL price is going to decrease because there's generally an inverse correlation there. When the Fed raises rates, it tightens monetary policy, causes more uncertainty, and as a result, fear enters into the market, and that's when the VIX price goes up, which is what this ETF is based on. And then the price also goes down of SVOL. So this was when the Fed announced that they were going to raise rates in November 2021. They actually started raising rates in March of 2022. We'll take a look at the VIX SVOL comparison real quick. But as you guys can see, the price for well over a year now has been relatively stable. And all the while, if we pop onto the SVOL website and scroll down here to the passive income payments distribution history, you guys can see that the payouts have actually been relatively stable. So even during the drop, I mean, they were kind of inconsistent here, but then I guess they picked the amount they wanted to pay out, which was 32 cents per month. But you can see that the price has been pretty stable since then. Even on the drop in the markets, they only reduced it by 2 cents a share, which is really honestly not that much. And that happened in, looks like July of 2023. So most likely it ended up dropping, I would guess, because the markets are moving up. Again, you have to understand that yield and price are inversely correlated. When the price goes up, the yield typically goes down, and the inverse is also true. So this would be reason number one, is because of the stability of the stock. It's not like the yield max ETFs where they're really just ripping all over the place. But you have to understand that that's the way tech stocks are. These are the biggest companies in the world, Apple, Tesla, Microsoft, Nvidia, Google, the ARK ETF. I mean, they're extremely volatile. They're going to be volatile because a lot of people are invested in them. A lot of people are trading them because they're tech stocks. Stocks that are based out of the NASDAQ or tech-based stocks in general are typically going to be much, much more volatile in price swings than something like, say, Coca-Cola or Pepsi or Fred Meyer's, or, well, I guess not Fred Meyer's, it'd be Kroger or Walmart. Those are more stable, slow-moving companies. Tech stocks in general, whether they're bigger or smaller, doesn't matter, are usually very volatile. So we're going to take a look at the VIX here and show you guys a little inverse comparison that I have mentioned in previous videos, but I have not brought it up until this point. So the markets, as of recently, have been kind of getting slapped a little bit, and as a result, the VIX has gone up. As I told you guys, when the markets go down, expect the VIX to go up. If you haven't seen my macro video, please go watch that for the month of September. You'll see what I'm talking about. But if we really, really scroll out here, you guys can see that there is more or less an inverse correlation between the two. So what you would want to see to buy SVOL at the absolute cheapest prices is something like an 85 here. Let me actually get rid of these pivots so it's more clear. here we go. So you'd want to see something like, let me see if I can, okay, it doesn't actually even go back that far, but basically pretty much you guys can see the VIX is way up here, and while the VIX is remaining high, basically the price of SVOL is heading down, and while the VIX is going down and we're staying low, or I should say while the VIX is trending down, you guys can see that the price of SVOL is moving up, respectively, with the exception of, I would say, probably the last couple of weeks here. So if we scroll in a little bit, you guys can see that the last few weeks here have been pretty bearish for SVOL, and the VIX is going up. Reason why that is because the indices have kind of been getting beat down a little bit. You can see the SPX is at 4,200 compared to its local high of 4,600. So reason number one would be stability. Reason number two would be high yield. Again, the NASDAQ.com does have the dividend payment history here, but it does not show anything past July. So I went over to another website called dividend.com to take a look at this. You guys can see that the information is up to date here. There was a 2-cent reduction on the dividend, but in all honesty, you're getting a $22 stock or ETF and a 30-cent payout per share. That's pretty good. It's a 19%, 16 to 19% yield somewhere in there. So in terms of the dividend payout, it's pretty good. You're getting a high yield for a stable ETF. I would say that generally, if the Fed was not raising rates and we were in a typical bull market economy, bull market technical cycle, most likely SVOL is just going to slowly trend up because the markets are going up. The VIX will end up staying extremely low. As you guys can see in previous years here, pre-Fed rate hikes, it was pretty low for the most part. You had like some spikes along the way, but nothing too extreme. Like we didn't see it up here all the time like we did last year. And as a result, SVOL will most likely head higher from there. So let's actually talk about what SVOL is. You guys know what it pays out. It's a relatively stable ETF. There is a high yield. So let's scroll up a little bit and take a look at what SVOL is. So it says, Simplified Volatility Premium ETF. SVOL seeks to provide investment results before fees and expenses that correspond to approximately 1/5 of 3/10, the inverse of the performance of the CBOE Volatility Index, the VIX. Short-term futures, so it trades futures, as you guys can see here, index, while also seeking to mitigate extreme volatility. Traditional sources of income are failing to meet investor needs in today's low-yield environment. SVOL aims to provide an attractive income stream and source of diversification while seeking to avoid risks inherent in other income-producing asset classes. So one of those supposed risks that a lot of you guys might be thinking about is probably NAV erosion. We're going to take a look at that too. So the fund's short VIX position provides investors an optimized exposure for monetizing the premium in the VIX futures market and all this other stuff. You guys can read into this if you want to in your own time on the simplify.us website. So they got some videos here that you can look at to better understand the fund. The ticker symbol is SVOL. The expense ratio is 0.66, which, considering they're paying a pretty high yield, is honestly not that bad. Some other important things, they have about 450 million in market cap. As you guys can see, if you compare this to Tesla's 650 million, Tesla is much more popular right now. 20 million shares outstanding. The current yield is about 16%, which is pretty good for a monthly payer. It does pay monthly. You got your SEC yield. This was created in it was created in May of 2021. So shortly just after the Fed started raising rates, which is pretty much the main reason why SVOL went down, is because the Fed basically induced fear into the market and they said, okay, we're going to raise rates for however long. They didn't say exactly, but we know it's been about a year and a half. And as a result, it's kind of beat down the price of the stock. But when they start cutting rates after that, I'm expecting we think that the price will go up. Not financial advice, but So you got all these other metrics here. You guys can look at this for yourselves later. But another important one, a lot of dividend investors don't like K1s, us included. There is no K1, thank God. So another important thing we're going to look at here is the discount to premium. As you guys can see, this is very, very rarely at a discount. If you get it at a discount, it's a great time to buy. It's pretty much almost at a premium, but then again, the yield is so high and it pays so much per share that it's probably pretty rarely going to be at a discount. And this is one way to measure whether a fund has NAV erosion or not, is if there is actually not just based on the share price, but also based on how often throughout time the actual ETF is at a premium versus at a discount. Obviously, if it's at a premium more, that typically is a good thing. So last year, you guys can see that because we were in a technical bear market, there was a lot more discounted days. This year, not so much. And you guys can see that they have some, looks like some bonds, and not really sure what this is. You guys can look into this in your own time, but you can see here that they do VIX futures, which the dates are, I'm assuming these are the front months, which is for January 24 and March of 24. So there's all that information. Then they have the dividend history here that you guys can look at. So the third reason is diversification. If you guys are not entirely comfortable putting all your money into just a few positions, this would be another one to add to your portfolio if you want to, for more diversification, more payout streams, and also a little bit more anchoring of your portfolio, if you will. So as you guys can see, we do not have a lot of SVOL currently, although we have had quite a bit in the past. We're considering picking some up because the share price at this point is so incredibly cheap. But if I go into the dividend history here, if we scroll throughout here, you guys can see that we have actually been receiving dividend payments from SVOL. The reason we have not bought this fund for quite some time is because we were waiting for the price to come down. It's not something that we always do, but SVOL is one of those funds that, it sits at a particular price for a long period of time. So we didn't really want to be overpaying here when there were so many other stocks that were at a discount. But yeah, as you guys can see here, back in July, we were receiving pretty hefty dividends from this particular ETF. Trying to see if there's anything else here. Yeah, so here's another one in May. So there's that. This covers the different futures contracts. You guys can see that there's a lot of different futures that can be traded. You have the indices, you have crypto, you have live cattle, which is deliverables. Again, if you trade an expired contract, a deliverable contract means it's going to be physically delivered to you, like cattle or oil. You got your foreign exchange, you got the indices and oil, which is the main things that we trade, the treasury notes, agriculture, precious metals. You got other things like crude oil and natural gas and gasoline. So there's some foreign exchanges here that you can also trade out of Europe, and you have things like sugar, cocoa, cotton, coffee, the ICE dollar index. I'm not sure what this is. This may be like a different version of the US dollar, and a whole bunch of other stuff here. But as you guys can see, there's basically pretty much nothing in terms of the VIX being traded here. So it's pretty hard to come by, but it is traded in futures, as you guys saw on the fund. So anyways, these are the 3 reasons to consider buying the SVOL ETF. If y'all enjoyed this content, please like, comment, and subscribe, and we'll see y'all later. Peace.